Well, the high plateau that he predicted did crash. By 1933, unemployment was up to 24%. The GDP fell from over 20 billion to under 2 billion. And stocks had lost 90% of their value by 1933. So what did the government do? Well, we have to understand that President Hoover, was no different than FDR. It's a popular myth that Hoover was a free market president, and truthfully, he wasn't. In fact, a lot of the programs that FDR is famous for were actually started by Hoover. He also raised taxes and enacted new taxes through the Revenue Act of 1932. That's not what a free market president would do. And to understand what FDR did in the 30s, we have to understand what he thought caused the Depression. He thought that falling prices caused the Depression. And so he figured that if you could prop prices up, even artificially, he could stop the Depression. He did this in agriculture through the Agricultural Adjustment Act. Under this act, 6 million pigs were slaughtered and discarded, and 10 million acres of crops were left to rot. This was to raise prices during a time when thousands of Americans were starving. And that was FDR's response to the Great Depression. Something else that we have to realize what happened during the Great Depression was what F.A. Hayek later called regime uncertainty. That is, people had no idea what FDR and the government was going to do during the 30s, so they weren't about to make any investments or start businesses because they didn't know what new taxes or regulations would be enacted, so the economy basically stagnated during the 30s because of the fear of the government. And a lot of people will say, well, if nothing else helped, at least World War II got the economy out of the Depression. Well, not really. Ludwig von Mises, an Austrian economist who also helped to develop this business cycle theory of the recessions, he said, war prosperity is like the prosperity that an earthquake or plague brings. In other words, there is no prosperity. War doesn't create prosperity because you're sending some of the most productive people in the economy overseas to either be killed or injured, and you're diverting production to producing these materials that will be used overseas and basically be destroyed. This doesn't create prosperity in an economy. So we have to ask, well, what did help the economy? Well, there's three things that we can look at. Firstly, after World War II, the economy returned to a more capitalistic structure. A lot of the rules and regulations of the New Deal and World War II were lifted, and it made it easier for businesses to grow. Also, something that I call the wear effect came into play. That is, people had not been able to buy new products like cars during the 30s. They couldn't afford it. And during the war, they couldn't buy these products either. So by the end of World War II, people had gone, let's say, at least 15 years without a new car. Well, a lot of people needed new cars and refrigerators and items like that. So that helped to stimulate the economy as well. Also, during World War II, a lot of economic data was collected that portrayed the economy as being more prosperous than it really was. And it led people to have more confidence in the economy and to have the optimism to start businesses and things like this. So from this brief look, we can see that the economy didn't recover from the Great Depression because of FDR and his intervention, but in spite of it. So now let's turn our attention to the 2008 recession. And to understand that, we have to understand the housing industry, because it was a false bubble in the housing industry that caused the recession. And to understand the housing industry, we have to understand Fannie Mae and Freddie Mac, who are actually not makers of fine chocolate. They're actually the Federal National Mortgage Association and the Federal Home Loan Mortgage Corporation. So what are these things? What are these entities? They're called government-sponsored entities. What do they do and how do they work? Well, let's take a very simple example here. We have a person who wants to buy a house. So they get a loan from the bank, and they give the bank basically an IOU. I'll pay you back later. It's basically what they're doing. The bank turns around and sells this IOU to Fannie Mae and Freddie Mac. Then Fannie Mae and Freddie Mac turn around and sell a whole bunch of these IOUs to investors as mortgage-backed securities. I'd heard a lot about mortgage-backed securities, but had no idea what they were, and that's basically what they are. A bundle of IOUs that the investor figures he's finally going to get back after a while, hopefully. Not everybody defaults, which actually did happen. So that's how the loan process works. And so we have to ask, well, what caused the housing bubble? And there's a number of things we can look at. Number one, adjustable rate mortgages. These are mortgages that start low, but the mortgages have interest rates that start low, but then the banks are free to raise them whenever they want. But it looks good when they're advertising, and so it provides an incentive to people who want to get a home to go out and get a mortgage. Also, Fannie Mae and Freddie Mac's lending requirements were eased. Well, why was that? Well, because during the 90s and the early part of this decade, it was a popular political thing to talk about affordable housing for everyone. The politicians were talking about giving housing to minorities and to low-income people, to everybody. We've got to give everybody housing. And because Fannie Mae and Freddie Mac are government-sponsored entities, they were influenced by this. So their lending requirements were eased so they could get loans that were more high risk. This also affected the banks, and through the Community Reinvestment Act, they were forced to give out higher risk loans. And it also affected the private rating agencies. They didn't want to get in trouble for opposing this politically popular initiative, so they went along with it too. Also, pro-ownership tax codes provided incentives for people who took out a mortgage to get a home, but not for people who bought a home up front. The tax codes only applied to those who got a mortgage. Also, we have to look at the obvious fact that the banks couldn't lend out money that didn't exist, and the Federal Reserve is responsible for funding this whole scheme. Also, we have to look at the idea of businesses being too big to fail. This led companies to make bad decisions because they figured the government would be there to bail them out. And well, as we know, that's exactly what happened. There were bailouts for everybody. There were bailouts for Bear Stearns, Fannie Mae and Freddie Mac, and more. And even the New York Times realized the significance of these bailouts. It was, quote, the most radical intervention in private business in the central bank's history. I mean, this is not capitalism. This is socialism, when the government comes in and bails out businesses. We also have to look at the TARP bill, which was supposed to be used to buy up toxic assets. However, Treasury Secretary Paulson changed his mind and decided to use it to prop up consumer credit. The same goes for cash for clunkers and the housing rebates. They're trying to keep this bubble from bursting, this bubble that was created by the Federal Reserve and the government. They're trying to keep it from bursting. They're doing everything in their power to do that. And we hope it won't work in a way, but then, because that means down the road we're going to have an even bigger problem, then it's going to hurt to have it burst now too. So we're going to have to suffer with the consequences either now or later. And unfortunately, too many people want to push it down the road to when people like me are older, and I have kids, I have a family, and they don't want to deal with it now.